Is this like a Santa Claus rally? That historical presence is like a small cap Santa Claus rally?
Yeah, I think so. You have some interesting retail numbers that start to come in. I think you have some smaller cap retailers that are getting ready for Christmas. I think you have some other things that people start to get ready for. There's the January effect that used to happen that people tend to now pre-trade. So I think that a lot of that is part of that Santa Claus rally.
So that's historical precedent, but it seems like we're just in like a whole new regime when it comes to the markets and just about everything else. Do you see that precedent changing in a meaningful way this year?
I think what you have is a couple of twin tailwinds. One is you have a much more stable economic environment in 2025 than we prepared to have in 2024. We were worried about soft landing, hard landing, Fed rate cuts, all that kind of stuff. And I think that you have a better earnings environment for a lot of parts of the market than people were giving it credit for last year.
All right. Greg, you're really a good sport. I think the last time you were here, I was just like, small caps, what are you talking about? They're not working. Even you admitted they hadn't been working for a couple years, right?
3 years.
All right, so we want to show the ETF that you manage, ticker GSC, the Goldman Sachs Small Cap Core Small Cap ETF. You're up over 20% this year. You're outpacing the Russell 2000 this year. Russell 2000 right there, you see up under 20%. You're up 23.5%. What's the difference between this ETF and the index? What are you doing differently?
So we start first with a quality approach, and I think that is something that people need to do in small caps, because in the index there's a lot of stuff that you probably just don't want to own. I think that there have been things there that have that really that don't really need to be in people's portfolios. You start there, and then when you look for companies, you want to look for companies that have strong management teams, better than expected in our view, earnings growth, and we look for catalysts. And I think that some of the catalysts can be in things that are thematic, like an AI or a med tech area, or just kind of very much bottoms up. Where you have some companies that are looking at significantly better opportunities, especially in the restaurant space, because they're more competitive than they were a year ago.
By the way, one of the holdings of your ETF is Shake Shack.
Right.
All right. Gave you your flowers, Greg. Now we got to really talk about this.
Right.
One of the things that people always say is that small caps, they trade at a discount, they have better earnings, but I'm looking at the numbers from LSEG. They don't really trade at a discount. The S&P is 23 times. Small caps are 29 times when it comes to forward PE. So there's no discount there. The other part of the story is higher earnings growth. Mm-hmm. Does that continue to play out? We're talking about possible tariffs. We're talking about maybe a pause in interest rates. Those are two things that seem to be kind of fighting or conflicting forces on this small cap story.
So on the earnings side, I think what you have is the small caps went into this downward cycle of earnings a lot earlier than the large caps did, and people cut numbers. So the revisions to the upside have come a lot slower. I think people have been reticent to kind of raise numbers. So you look out to 2025 and you see a mid-teens type earnings growth opportunity for the small caps, where I think it's double digits, but it's lower double digits for the large caps. We think that persists, and we think the companies we own are actually even better than that. I think that on the valuation side, if you look across what we think of as sort of that quality filter, 400 or 500 companies that we look at to kind of choose for our portfolio, they do screen out a lot cheaper than the rest of small caps. Okay. Maybe it's because they have a better earnings path. Maybe it's because they are just they are overlooked. But I do think that's that area, especially because of the profitability mix towards ours, it makes it a little cheaper.
By the way, the 4P of your ETF is about 21 times. Mm-hmm. I want to get into the PCE report coming up today. I've talked to a lot of traders. In fact, I did a story on CNBC Pro about it. Some people believe if it comes in hot, that's going to lead to a spike in bond yields. How does that impact small caps? We just saw them hit an all-time high earlier this week. But some of that is really a rate story, right? I mean, rates have to stay low to support these companies moving higher. So in your mind, I guess, how do you see PCE? How does that play out for small caps, at least in the near term until we get to the Fed meeting?
Yeah, I think the inflation stuff is something we pay very close attention to, because small caps can't always pass it through like large caps can. So I do think that we've seen some relief in some areas, especially in food. We're watching some of the housing-related stuff a little bit more closely, because I do think that that's a part of the story, especially with the new administration, that you want to see some degree of relief on the housing side. That seems like it's a really problematic structural story. Some of the more leisure-oriented things seem to be coming in a little bit more normalized. So I don't think it's as tight as it has been in the past.
Small caps move higher from there, hit another all-time high?
I do think so.
All right. You are talking your own book a little bit, but thank you for being a good sport, because we gave you a hard time last time here.